What is up guys, Taiki here, and in this video I'll be going over the bearish case for DeFi and how I'm navigating current market conditions and going over, my portfolio a little bit. So if you like the content, please like and subscribe and leave a comment in the comment section below. Now this is my initial advice, and yeah, it's definitely not a fun time to be in the markets right now. There's a lack of capital inflow. There's everything in crypto is inflationary. So if there's not new money coming in, the price on average goes down. And just generally a lack of innovation is definitely taking a toll on the markets. There's also a buyer's strike amongst all risk assets, whether it be in the stock market, crypto, whatever. There's geopolitical uncertainty, macro uncertainty, monetary condition, there's uncertainty everywhere, right? And it's natural for people to take risk off and reevaluate once all these uncertainties are cleared up. So maybe don't expect up only markets from here on out. Even you look at my my YouTube metrics, it kind of is trending down. I guess I haven't posted that much videos recently, but there's definitely not new people, money coming in, right? It's like people watching my channel are just farmers that's been around since 2021. Early to mid 2021, and we're just like, damn, this market suck, right? It's like it feels like all the energy is sucked out of markets, and definitely not a fun time to be in the markets right now. And I definitely didn't play everything perfectly either. So part of the reason why I haven't been making that many videos isn't because I'm abandoning YouTube. It's just that there really isn't that much to talk about, and I don't want to start making a bunch of random content, for the sake of getting clicks and whatnot, So I was like, should I just start making bearish videos just for the hell of it? I had a lot of comments in this tweet, and I might start doing podcasts too, just to talk to people that survived past bear markets in the past. But in this video, I guess I just wanted to go over the bearish case for DeFi, just because I don't feel like people really cover these things. And I feel like people that are bearish crypto or just DeFi are just oh yeah, it's not going to work. But I'll kind of give a case on more fundamental reasons on why DeFi just might be bearish in general. Okay, so let's kind of go over that. So in my 2022 predictions video, I mentioned that so this is early January. I'm bullish DeFi short term and long term, right? I'm optimistic in the short term and long term because short term we could be getting more incentives, right? And I guess the macro conditions were less poor back then. And then long term, you just bet on the devs to do something, right? you bet on the devs to keep churning out quality products, to keep innovating on what's already made, and make DeFi a flourishing space. However, I mentioned that in the midterm, right, I'm bearish DeFi. And short to mid to long term, I don't really have a time horizon, right? I'm just just generally applying these concepts. But the reason I was midterm bearish DeFi was that if you look at this DeFi and how it's grown since 2021, it's driven off of incentives, right? Most of DeFi is incentivized where these foundations, right, these L1 foundations have to pay you to use their chain. When the incentives are out, what happens? And we kind of see what's happening now, right? Avalanche Rush, right? They paid you to use it. Everyone goes in, we farm, we make money, and then, we're yeah, kumbaya, right? Phantom, right? There was an announcement for incentives. We go there, it's happiness, right? It's happiness all around. But, after some time, the incentives kind of go down, right? There are still incentives, but, it's not as high as it used to be. And in these conditions, DeFi activities plummets. And the reason is because the truth of the matter is most of these DeFi applications are just not good, right? It doesn't really create economic value. It just exists to, it just exists to exist, right? And if you take into account the DEX fees, right, the 0.3% DEX fees that you pay, the slippage that you pay, the gas you pay, on average, the average market participant loses money, right? Just mathematically speaking. And let's kind of go over centralized exchanges. And in my opinion, right, I think the centralized exchange experience is much better than the decentralized exchange experience. Of course, some assets you can't buy on a centralized exchange, but the fees are much lower on a centralized exchange, and there's essentially no slippage because of the market makers, right? And of course, if you're using a DEX, right? And to be honest, I mostly operate on DEXes. I don't really use centralized exchanges anymore, but and that's because if you're using a DEX, you're most likely just operating on chain, or it's to buy low cap altcoins that aren't listed on a centralized exchange, right? And if you think about it, why do people buy low cap altcoins? Well, it's so that people can make money, because in a bull market, these low cap altcoins go up in bull markets. If we're not in a bull market, there's less reasons to use DEXes, because you have to pay higher fees, higher slippage. It's not that liquid. So, the activity and metrics across DEXes and just, I guess, DeFi ecosystems in general just deteriorate. Let's go over money markets, right? And I'm a huge proponent of money markets and why it's so important for these ecosystems to have money markets, because money markets create leverage, and leverage kind of alludes to like this point where, it creates more activity on an ecosystem, right? And it can't just be any money market. It has to be a money market with incentives, because every loan in DeFi is over collateralized. So, it's not really capital efficient, right? It doesn't really make sense in most instances to, take out loans. Actually, I don't want to say that, but you kind of get the point. It's like less capital efficient. Money markets with incentives create leverage, right? You deposit whatever ETH, right? You earn lending fees. You also earn incentive mining programs. You borrow stable coins, right? And maybe the loan is subsidized, right? You pay 3% interest in USDC, but let's say Ava Labs is paying you like 3% in AVAX, right? So it's like, oh, it's free money. And then you take your USDC and you stable form, or you just like buy more AVAX, or buy more ETH or something, right? It creates more leverage, and it creates more leverage than I guess it creates more buying pressure than it actually exists, right? Because people are using their collateral as a loan, right, and using it as collateral to take out a loan to buy more things with it. I've definitely done this in the past, right? If you go back to like August, I was like leverage long AVAX. And I also like leverage long Phantom back in the day. But like in these market conditions, like who the hell is doing that, right? Like it's like you have to be a madman, right? You have to have Saylor level conviction, right? You have to be Michael Saylor, and I'm not trying to be Michael Saylor right now. Because the leverage creates more buy pressure. More buy pressure means wealth is created, right? Because or it's not like real wealth created, I guess. It's like artificial wealth being created, right? If everyone in the industry just takes on leverage and buys coins, then everything goes up. But at some point people have to like take profits, right? And then price goes down. But just speaking generally, if number go up, then more people enter the space. It's like, oh yeah, like it's more money. Then the wealth is created. Wealth trickles down into the risk curve, and then if more people take risk, then more altcoins pump, and then the more altcoins pump, it's like, oh my god, like this altcoin is pumping. It's like the next 100x opportunity, and then it creates this speculative fever, I guess, around the markets. And I guess what's happening now is that the incentives are drying up, right? I mean, there are still Avalanche Rush incentives on Aave, and I'm on Aave. I'll share a screenshot later. But if you look at like Phantom, there's like not that many incentives, right? Aside from like the farm tokens and the project I talked about in January of Near. I'll talk about Near later, but like those incentives got delayed because of like smart contract issues and like the blockchain issues on Aura, which I'll go over. So, if there's no incentives, then there's like less reasons to use these chains. Truth is that most DeFi dApps just aren't good. And, the majority of innovation, right? I mean, innovation still occurs on other L1s, but I feel like, generally, like innovation happens on ETH, on Ethereum side, and then people fork that onto other L1s, which, and they're still quality products, right? And, applications like Trader Joe, they forked like Uniswap or like SushiSwap or whatever, and they innovate on top of that, and it's actually creating value, right? Which is fine. But on a general sense, most products just are not good, right? And the tokenomics are just awful in general. And it doesn't mean that incentives are everything, right? If you look back into 2020, there was like no ecosystem fund during DeFi summer, but we still entered a bull market. But that's because DeFi was so small, where like any capital inflow was like propped up the markets, and we were like experimenting, trying out Aave, trying out compound food coins, like sushis, whatever. What I mean is that it's just easier to play in an environment where money is falling from the sky versus trying to extract value from the markets. I mean, there are definitely people like making money right now, right? In DeFi, like, or CeFi, like whatever, trading, right? But, it's definitely harder to make money now than, when Avalanche Rush was first being started. So I just like operating in those environments. And that's why I've been kind of focused on these, I guess, ecosystems or, I guess, sectors where there are going to be incentives. But that's just like how I think about things. And yeah, so let's kind of go over my allocations, and it kind of reflects on this entire thesis. Because without incentives, you kind of have to do like just due diligence and like look for undervalued projects, which is like totally fine, right? I can definitely do that. But you know, it's just much easier to like make money when, you know, like Ava Labs is like, you know, like throwing money in the sky, right? You know, like all these bloaters, right? Anyways, aside from the majors, right? My incentives are needed apply to how I'm currently allocated, at least in the current like crypto landscape. So I mean, this is like a rough generalization. It doesn't go over like the small positions I have, but you know, I'm like, you know, over half my portfolio is in just the majors and stables. I have like 15 to 20% in GameFi, 15% near Eco, 7% Luna, and then I have just like a random other plays that I don't want to talk about right now. I'll touch on GameFi first, because in this post by Arthur Hayes in December of last year, definitely should listen to Arthur. For those that don't know Arthur, you know, he was the co-founder of BitMEX. He got indicted, I think. I don't really know what his current situation is, but he's a very smart person. But, you know, he said he started becoming bearish in December, you know, and he said that if you want to maintain macro crypto exposure, you know, maybe take some risk off, and then if you have to, like maybe allocate to the metaverse, play to earn, NFT related, because the success of these themes do not hinge on global monetary conditions, but an actual change in behavior of actors whose lives can be dramatically improved by adopting new forms of technology, which does make sense, right? Like people buying NFTs, people playing Axie, like they really don't care. Like if you're being liquidated on Aave, right? They really do not care. People are playing to earn because they can make money for themselves, or people are buying NFTs because, you know, it's, you know, there's like natural demand, right? There's like outside demand creating those that pressures, and like metaverse, like I don't really know what the hell that means, but you know, maybe more money is going to trickle in there. So for my gaming exposure, it kind of combines the incentives and the Arthur thesis. And you know, I've talked about DeFi Kingdoms and Cromata, right? And those are like my top two gaming positions. And that's because, you know, I think the teams are good. I think the game actually has users. You know, it's still speculative in nature, and there are like bullish technological innovation coming along with Avalanche subnets, along with the Rush 2.0, right? And Rush 2.0, is it going to happen? I don't know, right? I'm just going off of what Ava Labs, their team, has been saying on Twitter. But you know, if you can get subnets, which is a technological innovation, and then get Rush incentives, I feel like that's going to be good for these ecosystems, right? You know, because even these play to earn games, like they're not that good, right? I mean, it's like the barrier to entry is like pretty high. You know, it's kind of hard to figure out, like, you know, like is it even a game? But you know, if you have incentives, then it's probably going to be good, right? And going off of that, talking about the near ecosystem, you know, they announced this $800 million program in October, I believe, and at current prices, it's over $1 billion. And you know, the incentives are coming, right? It's a question of when, not a matter of if. And if you've been tracking the activity for like the Near and Aurora grants, you know, like any team that's like building on Near and Aurora, they're like receiving like $50,000 grants, right? I mean, the projects are being built. And if you're a developer, right, and you're trying to build, I think all you have to do is like dox yourself to like the Near/Aurora team, and then, you know, prove that, hey, like, you know, like the project I'm building is not a total piece of crap, and then you can get a grant, right? And you know, it's been slow, but you know, there's actual development going on, and you know, I think that's good, right? Even though prices don't. And don't worry, right? I'm bag holding with you guys if you're still holding a try or something, but you know, lots of building going on, right? So many grants, and the incentives will go to users too at some point in the future. And the team is incredibly strong, right? If you go to the Near side, the CEO Marik, she was the former CMO of Circle, right? And Ilya, who's like the co-founder of Near, like developed the tech stack, and he's really smart. Aurora side, Alex Shevchenko, I think, you know, he's a great dev. You know, strong team all around. And the problem with the delays, right? And the reason for the delays is that there are these gas limit issues. If you use money markets like on Aave for Avalanche or Geist on Phantom or something, you will notice that every smart contract that you interact with, the gas is higher for money market protocols, right? And it's because, I guess, for these lending smart contracts, it's a little bit more complicated. So it takes more gas to use, and there's like back-end issues that they're dealing with. And I heard it's going to be resolved in like early March or something. So I mean, I don't know, right? It's gone delayed so often that like there's no way to know. But you know, it is what it is. And these gas limit issues are preventing money market dApps from launching. And like I mentioned earlier, you know, this violates the humble farmer thesis. If there's no money market with incentives, then like there's no point using it. So I think for me, for Near and Aurora, I think I was like way too early. I'm still like pretty optimistic on that entire ecosystem for this year, right? And I guess we're still like halfway into Q1, right? So it's like not invalidated per se. But you know, being too early is the same as being wrong, right? Because if you're too early, right, there's like opportunity cost of capital if you're allocated incorrectly for like 1 or 2 months or something, right? So you know, it is what it is. But you know, I'm still optimistic for those that still are interested. And if you look at the weaknesses from other L1s, you know, like Near included, you see that, you know, these incentives are needed for user acquisition, right? Because incentives are essentially like a marketing term, right? Marketing tool, right? Like, would you rather like have Ava Labs spend $100 million making banner ads on like around New York City, like running TV ads, or would you rather, you know, give $100 million away to the users, right? It's definitely more beneficial that way. And I would argue that the Avalanche ecosystem is really good, right? I mainly operate on Avalanche. And what was I gonna say? Yeah, and I feel like when Avalanche Rush started, I think all the ETH maxis were like, oh yeah, like they're gonna, all the mercenary farmers, they're gonna farm and they're gonna leave when the incentives are out. But that hasn't been the case. People actually stay, right? Because Avalanche is kind of like ETH layer 2, right? And like I'm not using Arbitrum and Optimism. Like the Arbitrum and Optimism sucks. You know, there's like no activity. RPCs are awful at the current at the date of recording, obviously. So you know, it actually works. It actually works. And that being said, like what are farming strategies that I'm deploying? And one of the things that I've talked about that I think, you know, is still has merit is hedging, right? And I have some hedges on. I'll show some. And it's not because I'm like that bearish, right? I still believe that, like, I think Bitcoin is like in this range between like 30 and 60K. And, you know, we're definitely like the lower part of that range. So I'm not like, you know, saying that we're going to dump, right? But it's more so the idea of, you know, survival and prioritizing, minimizing downside over maximizing upside, right? Like, I don't really care in the next 2 months or 3 months or whatever if I don't maximize my gains. If, you know, if the cost of, you know, not getting wrecked is I protect my downside and maybe on the upside I don't make as much money, but that's fine, right? Because I'm still bullish this industry as a whole. In the short term, it's very uncertain, so I'm just gonna have hedges on. So if the markets do dump, you know, at least I'm hedged, right? That's kind of how I'm thinking about things. And I went over this strategy on the 7th of February using GLP and GMX. I'm not gonna spend too much time on it because, you know, I made a 20-minute video. Check that out. But I'll go over like the general sense. And even this strategy has been questionable recently, just because the activity on GMX has gone down, and I think someone was exploiting like one of the it's not like a technical exploit, but you know, there was like something where like some users were like able to extract value from GMX, and they're fixing it, right? So that for the next 2 to 3 days, trading activity is going to be halted, and you know, that means that there's less fees to go around, right? You can see this in the metrics. Fees have gone down, and I guess, you know, if the markets are dumping, there's less incentive for people to speculate on like leverage longs. But you know, I still like GLP because it's like the yield is actually coming from like fees generated on the platform, aside like, and not from like farm tokens, right? I'd rather earn like 20% paid in AVAX than like 200% paid in like some random farm tokens that's gonna dump 90% in the next like 2 weeks. And the hedging strategy that I'm currently deploying, and you can use, I mean, you don't have to use GLP. You can use like TriCrypto, or you can use Trader Joe. You can borrow a volatile asset on Aave and enter a volatility muted form to maximize your sleep adjusted returns. I'm gonna meme sleep adjusted returns in 2022, and you know, yeah, I mean, tell your friends, right? Like, hey, like, don't be a degen. You gotta maximize your sleep adjusted returns. So you know, this is a screenshot of my Aave position, right? As you can see, I have. Let's just look at the ETH aspect, right? So I have 50 ETH on the lending side, right? You know, just generating 1.4% or whatever. And on the right side, I'm borrowing 50 ETH, right? And I'm using the borrowed amount to put into GLP, right? So I'm effectively short ETH because I'm borrowing it and selling it to buy GLP. But you know, it is what it is. I don't really care, right? And you know, I could technically sell my ETH, right? But I don't want to deal with like capital gains and like the entire tax situation with crypto is so difficult that I'd rather, like, you know, not sell my collateral, but borrow the same amount. And GLP is 20% ETH, so I'm net long 10 ETH, if that makes sense, right? Because GLP is an asset, is a basket of assets containing ETH, Bitcoin, AVAX, and stablecoins. So, if ETH pumps, then I lose money on the hedge, but the rest of my portfolio will pump enough where I'm like, okay, I don't really care. If ETH dumps, then at least I'm hedged, right? My net worth is still going to plummet, but it's like whatever, right? It is what it is. What you can also do if you're feeling more frisky, right? If you're feeling more bearish and you want to short hedge more, is you can borrow AVAX and then enter AVAX UST or AVAX USDC, right? So borrow $10,000 of the AVAX, sell half into USDC, BNLP. If markets go sideways, you make money because you're earning fees. If markets dump, you make money because you make money on the hedge because you owe less, right? Because the value that you borrow is going to be worth less than the value that you have in your farm. If AVAX pumps, then you lose money on the hedge, but the rest of your portfolio is probably up more. So who cares at that point, right? Nothing wrong with borrowing AVAX, selling the stable coins to farm with, right? That's also a direct short. Or you can just sell whatever altcoins that you're holding and then farm stables, right? It doesn't really matter. But the idea is I'm just gonna make sure that I don't get wrecked, right? Because if you scroll around Twitter, there's people that's getting blown out because they're leverage trading and whatnot. And I'm not a good trader, right? I mean, if you just follow my move, I'm not that good a trader, right? I think I do an okay job catching trends, but I'm not good at selling tops or buying bottoms, right? That's not my strength. My strength is kind of doing fundamental analysis and I guess identifying quality projects. And for every loser, there's a winner, and on average, the winners make up for my losers, right? And that's kind of how you make money over time in crypto, right? Not everything that you put money in is gonna make money, right? I mean, I've had many 1% bets that go to zero, right? But that's fine, right? I risked 1% for that reason. But the winners hopefully compound over time, and that's kind of how you make money in crypto. So Taiki's hedged. Taiki doesn't like DeFi because it's all a scam. Not really, but what does it actually mean? Fundamentals matter. That's kind of how I want to get across. So that's kind of the point I want to get across in this video, because there's so many projects and most of them are going to go to zero, right? I mean, there's no innovation, right? You just introduce a new token and it's not creating any value, right? Because if a protocol is not generating any value, then it's going to go to zero. Why does it even exist, right? There's no point of a project existing if it doesn't really do anything. So the goal of crypto is to find a project that actually does something, right? What a novel concept. You have to look for revenue, right? Real cash flow. And you can't just look at revenue. You have to also look at, I guess, the inflation rate, because there's a lot of confusion between oh my God, this protocol is generating $1 million a week in revenue. It's so good. But that's price to sales, right? You can't look at price to sales ratio. You have to look, you can't look at the revenue and think of it as earnings, right? Because what if the protocol makes $1 million a week, but to earn $1 million a week, they have to offer $2 million worth of farming rewards, right? What if all the revenue is subsidized with the farming rewards? Well, then that project is going to go to zero, right? Over time, because if all the revenue is subsidized, then if the token dumps, then the revenue is also going to dump because people aren't really going to be using that platform, right? So you have to look for protocols that can actually have a way to profitability, right? It's kind of like Uber, right? Maybe a protocol that's unprofitable at the beginning is fine if they have a road to sustain profitability. Uber, right? 4 years ago, I was spending $4, going on 15-minute rides because they were subsidizing everything. But now that they're losing money, they can't really subsidize that much anymore. And now the rides are $20, right? Maybe that's partly inflation too, but there has to be a path to sustainability, right? Because farming rewards is a way to acquire new customers, right? It's a marketing tool. So what does this actually mean, right? Because it feels like this is happening, right? And until incentives come in, or until I guess more capital inflow comes in for whatever reason in crypto, you should expect price to go down because everything in crypto is inflationary, right? So there has to be buy pressure to offset that for prices to even remain stable, right? And I don't mean to hate on devs, right? There's actually there's innovation happening everywhere, right? but you know, maybe so, like part of that is going to take some time to play out, right? Because if you think about it, like all these projects, they like it's being worked on by humans, right? Like I'm a human, I make mistakes. Devs are humans, they make mistakes. So there's like that meme of like, hey, like are the devs doing something? Like yes, they're doing something, but I think most people in crypto just have like unrealistic expectations of like a project launches, and you're like, yeah, like make it pump devs, like make me money, right? But that's not their goal. I mean, maybe like some devs, like they're just in it for the money, right? And they're gonna like dump on you, and like they're gonna leave, and then because they're anonymous, they're gonna start a new project and then dump on you, and then keep doing that for like 10 months or something. But the good actors in this space, they're actually like they actually have a vision. They're working on something, trying to create economic value, and that's kind of what you want to bet on, right? It's kind of what you want to bet on, right? And one thing that I noticed is like gold is pumping, man. Like 3 weeks in a row, it's pumping, man. It's like it's still $1,900, right? But look at this uptrend. It's pretty crazy. And maybe Peter Schiff was right. Maybe everything is a scam, and we should all be farming gold, right? Whether it's like farming with synthetic gold assets, or we just like start going out in Arizona and like start digging for gold. Maybe that's what we need to do. But then I was like doing research on gold farms, and then today like gold mine finance hard rugged on Phantom, right? God damn it, the devs got us again. $800,000 already staked, and likely will be lost. Tomb Fork Watch, Tomb Finance. Oof, maybe the gold farms aren't that good. But in all seriousness, there's actually a pretty good gold farm on Mirror Finance, right? Mirror is on Terra. I have videos on this. I'm not gonna spend too much time on this. You can long farm gold 11. I mean, 11% is not that good, but I mean, it's gold, right? So long farming, you take, let's say $1,000 with the IAU, $1,000 with the UST, you LP, you farm, you earn 11%. And also, United States Oil Fund, right? 19% to long farm. Look at this, it's up. Oh my God, this is up only, right? I mean, this thing went negative in 2020, and now it's at $64. Like that's an infinity % ROI. Like that's crazy. Literally infinity %. I definitely invested in the wrong gas, right? Like the crypto natives, they told me that Ethereum is gas, Ethereum is money, but turns out oil is a better inflation hedge than ETH. The devs got us again. But in all seriousness, I mean, this doesn't mean crypto DeFi is dead. But it is what it is, right? I mean, I don't want to like say like, oh my God, we're gonna pump. That's not the point of the video. It's to acknowledge like the current phase of the markets, and how do we react. And how I'm allocated is I've always been heavier in the majors, right? Bitcoin and ETH and stables, I guess, just because I kind of think of them as like index funds, and I can farm with it, use it as collateral, yada yada yada. And when the market dumps, they just dump less. And if you can use them as collateral, you can also have these random strategies like hedging, all that, right? And then if you're going to be looking for more volatile altcoins, that's not like Ether or something, or AVAX or whatever, like not non-L1s, maybe it makes sense to focus on GameFi, not because it's guaranteed to go up, but it has a narrative that could definitely play out, and it could definitely onboard more users. So that's kind of how I'm thinking about it. And like you have to look at the fundamentals. In a bull market, everything goes up, right? You don't have to do that much research to make money. But in these market conditions, it's really hard, right? Even I'm doing so much research, but I'm still losing money. But the hope is that the research that I'm doing now will pay off 3 months from now. Is hopefully how I'm thinking about it. But nothing is guaranteed, right? And no one knows what's going to happen, right? Maybe I just get rugged everywhere. There are teams building quality projects. They have roadmaps to profitability. They have good intentions and a vision. They have clear product market fit. Bet on those, right? I think product market fit is the most important, right? Because you can definitely find projects that that are being pumped, right? But there's like no product market fit, right? There has to be product market fit. And lastly, optimize for mental health and sanity. Like when you're like managing money, right? Depending on how much money in crypto, how much money you have in crypto, you have to optimize for mental health, because maybe in the next 3 months we just pump to 40K, dump to 30K, you know, maybe imagine that scenario, right? That's going to be awful for your mental health. It's like, you know, if you go to 40K, it's like, oh, it's going to pump. And then if you go down to 30K, oh, it's going to dump. And then it just keeps doing the same thing over and over again. And at the end of the day, you might just like be getting like 4 hours of sleep. Similar to like late 2020, 2021, or like early 2021, you know, there's going to be, at some point, easy money is going to come, right? Today is not easy money, right? Today is not easy money. You know, so you want to be ready for your future when the easy money comes. And to do that, you need to not get wrecked in the short term. And that's kind of how I'm thinking about it. You have to protect the downside and accumulate quality. Like I'm not really like trying to like, you know, flip, you know, trade Bitcoin, like buy at 33, sell at 36, and then repeat. Like I'm not really doing that. That's not my edge. And also I forgot to put this in the slide, but you know, you have to identify your edge, right? Like if you're like a buy and hold investor, then like your edge comes from like patience and maybe like finding good farms, right? If you're like a trader, then you know, you can do a combination of farming and then trading, and then like that's maybe where your alpha comes from. And you know, if you're new to crypto, then like maybe you just focus on like safe farms first, and then expand into like random strategies that you think is gonna make you money or something. Yeah. I don't even know how long this video has been. I think this is the end of the, yeah, it's the end of the slide. I mean, this wasn't even like a bearish video. Like I can be way more bearish if you want me to, right? Let me know. Maybe next week I'll start making like super bearish videos. Not because I want to be bearish, but you know, maybe it's good to like just like be bearish, just so it can help people think about things better. I guess the problem I have with that is that like, if I'm going to be bearish something, then I have to give examples of projects, and I don't really want to bash on projects, because you know, not all projects that fail have like devs with bad intentions, right? I mean, it's just like a failed experiment, and I don't want to you know, bash on devs if they're trying, right? But you know, I can definitely make bearish videos. You know, I try to keep things positive on the channel, right? Just because like I don't really gain anything from making bearish videos, right? I just get people angry at me. It's like, you know, it's like send me threats on Twitter or something. So it's like for these public videos, it's like, you know, like it doesn't really I don't really get anything out of being bearish. But I mean, this was a slightly bearish video with, you know, with optimistic takes to it. So hopefully this kind of helps. But you know, yeah, thank you anyone that came to ETH Denver. I had a good time. I got a bunch of these bloater stickers, right? So many bloaters, right? You gotta love the bloaters. Make them rain, right? Make them rain. So thank you guys for watching, and hopefully you guys are doing okay. I think it's okay. So if you want to like take a break for like, I don't know, like a few months, or if you like go on vacation, right? It's just like, yeah, it's like stable farm, put a hedge on, go on vacation, come back. Maybe probably the prices will be like the same or something. So you know, just optimize for your sanity, your mental health, because if you're not thinking clearly, then you're going to make mistakes, and you know, you don't want to make mistakes when you're managing money. So thank you guys for watching, and have fun farming out there.